My client's loan approval was canceled 4 days before settlement. He had been fully approved. We got through the inspection. The house appraised at value. We were 4 days before closing. And then I got the call that no realtor ever wants to get from a lender. Called me and she said, Caryn, we've got a problem. I'm gonna tell you what happened. I'm gonna tell you what my client did wrong and what you should never, ever do when you're buying a house. Because my client's story isn't the only one. And I don't want this to happen to you. So let's dive right in. Before we start, I want to be clear. I am not a lender. I'm a realtor. And I'm going to share with you my experiences working in real estate for the last 20 years, as well as some of my colleagues. But if you have any questions about anything I'm going to talk about, definitely consult with a lender, or you can put your questions in the comment section and I'll get one of my lenders to answer them for you. All of these scenarios that I'm going to tell you about happened after the loan was approved, so I'm not going to get into what it takes to get a loan approved. Everybody is different and you need to consult with your lender to see what you need to do. This is about what not to do once you're under contract on buying a house so you don't put your loan in jeopardy like my client did. So like I said, my client was fully approved. He did a great job, the house had appraised, we were good to go. In fact, he was so excited about buying his first house that he decided to get engaged. Beautiful, right? New house, new fiance, what could go wrong? Everything. He financed the ring. He went into a store, found a beautiful engagement ring, and took a loan out to pay for the ring. He didn't think he was doing anything wrong. Why would he? Well, guess what happened? The lender, the one he's using to buy the house, gets notified of this hard pull for this loan to finance this ring. And two things happen. One, every time there's a hard pull, it affects your credit score. Now, in this particular case, his credit was really, really good. So although it affected his credit score, it didn't affect it enough to affect his approval for the home loan. The problem was the amount of the ring that he was buying was so much that it put his DTI, or his debt to income ratio, out the window, and he was no longer approved for the loan. Now remember, we were 4 days before closing, so all contingencies had been removed. He was in jeopardy of not only losing the house, his first house he ever bought, but losing his EMD, his earnest money deposit, which was $20,000. It wasn't just as easy as reversing it. He couldn't just bring the ring back and make the loan go away. It doesn't work that way. And the sellers of this house he was buying, they had a hard date where they had to close because they were buying another house and using money from a retirement fund to buy this new house, and they had to pay that money back into that fund by a certain date, otherwise it would have penalties. So they were really angry and really threatening to take his EMD or sue him for it because they were so upset about this all happening 4 days before closing. So I'm going to tell you what happened, and then I'm going to tell you some more things you should never do when you're buying a house, otherwise you will put your loan approval in jeopardy. So in this particular example, part of his original loan approval was a gift from his mom that had already been approved. So what we had to do was increase that gift so he could pay off some of his other loans to get that DTI back into an acceptable level so his loan could then be approved again and we could close on the house. This did delay settlement only a few days, but it did, and it caused a lot of heartache, a lot of scrambling, a lot of thinking and trying to solve it. And his mom had to find some more money to give him. I mean, it was not pretty, and I would never recommend this to anyone, but fortunately, the house did close. He did marry his love with that beautiful engagement ring, and I tell this story to all of my buyers, and now I'm telling it to you, so this never, ever happens to you. He did not think he was doing anything wrong, but unfortunately, what he did do canceled his loan approval. So some other things you should never do when you're buying a house are buy or lease a car. Both of these things, they'll take hard pulls, they'll pull your credit, sometimes multiple times, which will ding your credit and will affect your debt to income ratio. So don't do it. Don't buy a car, don't lease a car, don't buy a boat, don't buy or lease or finance anything until after you close on your house. Don't apply for a credit card. Every time you apply for a credit card, it's a hard pull. And if you start buying things with that new credit card, guess what? It affects your debt to income ratio. So do not apply for any credit cards while you're under contract to buy a house. Do not take any personal loans for any reason from a bank while you're under contract. Also for the same reasons. Anytime you take a personal loan, they pull your credit. And anytime you spend that money, it affects your debt to income ratio. So never take out a personal loan. I once had a client who took out a personal loan to pay for their EMD, their deposit on the house. You cannot borrow money to borrow money. So that was a big mistake that she did. So don't think you can do that. You can't take out a loan to then take out a loan. So no personal loans, don't apply for credit cards. Think along these lines. Anything that could pull your credit or increase your debt, meaning you're gonna have reoccurring payments, can really put your home loan in jeopardy. So just stay really clear of all of it while you're under contract. And here's another good one. And this happened to my colleague with her client, and oh, she was devastated. They've been looking at houses for a long time. She had a great job, made a lot of money, and was sure her credit was fine. She always paid her bills on time, no problems at all. Well, guess what? She found the house of her dreams. The lender went to pull her credit, and her credit had been dinged dramatically due to her not having paid a parking ticket. She swears she paid it, but she didn't, and then she forgot about it, and that fee doubled, and then it went to collections, and then it impacted her credit score, and she was no longer approved for a loan. So the lesson here is, if you get those pesky parking tickets, pay them, and then if you don't think you deserve them, then try to get out of it. But don't just say, oh, I'll deal with this later, I'll deal with this later, and then lo and behold, you never dealt with it, and it impacts your credit score so badly that you can't buy a house. I hope you guys got some value to today's video, and if you are thinking about buying a house, don't do these things. And if you have friends that are buying a house, definitely share this video with them. And if you're a lender watching this video, feel free to chime in and elaborate on some of the things that happened to my client and my colleague's client and explain it better when it really comes to the loan approval process. If you guys have any questions about anything, put them in the comments section below and I will have a lender answer them so you get the most accurate information. Because like I said, I'm a realtor and I'm just sharing my experiences with you to try to help you guys avoid the things that happened to my client and my colleague's client. Also, if you are thinking about buying a house or in the middle of that process, we did a video recently on a home inspection checklist for sellers and buyers, so definitely check out that video next. Thanks for watching. I do appreciate it. Bye!